Okay, good morning, everyone, and welcome to today's Tuesday Market Outlook webinar. My name is Prakash Vijayanath. I'm a senior analyst here at Options Play, and today we are going to be going over my thoughts and analysis on the current market. So before we get started, just a quick disclaimer. The types of securities, forms, and research tools used in this video are for demonstration purposes only and should not be considered a recommendation by Options Play or a solicitation or an offer to buy or sell any securities. This video is not intended to be used for individual tax, legal, or investment planning advice. So our agenda for today, kicking off with the major equity indices, highlighting some key levels. And we are seeing a bit of a pullback here, especially this morning with futures moving a little bit lower. So, I think, in my opinion, this pullback is welcomed because equities were in overbought territory for quite some time. So from there, we'll be moving on to fixed income and commodities. We'll take a look at the sector rotational model, highlighting which sectors are outperforming and underperforming the overall market. We'll take a look at a few subsectors of interest that I have for you today, and we'll end today's webinar with some bullish and bearish market observations. So taking a look here at the S&P 500 using the SPY ETF. And on the weekly time frame, things are looking quite good. Momentum has been increasing, very close to an overbought condition there on the weekly time frame. However, on the daily time frame, momentum has been overbought now for quite some time. So this reversal that we're seeing at 444 from Friday and an open lower this morning, I think that makes sense considering how overbought equities were or are across the board. And if we get a bit of a pullback, we could see momentum get to more modest levels, and that would provide a much better risk to reward bullish opportunity. So in terms of, if we do get a pullback, a more significant pullback, where would price really go? I'm looking at around 430 as a potential short-term support level. That did provide some resistance a few days ago, and that resistance could turn to support. So for now, we are seeing rejection of 444. The S&P 500 could move lower, recover from an overbought condition, and from there, that'll give a much better risk to reward for a move higher here. When you look at the key levels on the weekly time frame, the next one is really at around this 455, 460 area. Provided resistance in the past and some support on the weekly time frame. And overall, things are looking very bullish here for equities. It's just that this pullback, I do think it's going to be a limited time pullback. If you are going to trade a pullback with equities over the next week or two, make sure they're short duration trades. I don't really advocate for having longer term bearish positions, given that equities are only overbought. It just means that, we could get a pullback before another move higher. But from a fundamental perspective, things are looking good. Macro perspective as well. We are expecting another rate increase in the July Fed meeting, but that's still a long ways away. And there's a lot of economic data that needs to be released until then. We are seeing inflation come in better than expected as well. And jobs, coming in pretty much in line with expectations. And some data points point to better jobs reports for the economy and some worse. So mixed on the jobs front, but from an inflation perspective, it does look like inflation is getting more and more under control. That being said, let's wait until really next month for the next inflation announcement. From there, that'll give a much better indication as to what the Fed will do next. Moving on to the Qs, the Nasdaq 100 ETF, and we can see here price is at a major resistance level on the weekly time frame at 370. Last week, we saw a rejection of that level on Friday, and so far this morning, we are seeing price set to open a little bit lower this morning. So very similar to that of the S&P, where I do expect a bit of a pullback, potentially towards the 360 to 355 level. And from there, a nice risk to reward bullish entry point. So the Nasdaq 100, again, is very much focused around technology stocks, high growth stocks as well. And given the very risk on sentiment that we are currently experiencing with markets, I do expect the Nasdaq 100 to outperform the S&P 500. We saw with the AI boom just how much momentum there was for the Nasdaq 100. That momentum, though, has since declined a bit. So I don't expect the pullback to be as drastic or as significant as the S&P 500, and also this 370 level. I think it's only a matter of time before it gets broken to the upside. From there, we're looking at 380, and of course 400 as a next key level above that. Okay, taking a look at IWM, so we're looking at small caps and we're looking at the Russell 2000 ETF. And once again, very much respecting its key fib levels. So we have 170 major support. The price was initially struggling to break above it. There wasn't a lot of momentum. Momentum was actually negative. But since then, we have seen a break above 180, which was a minor resistance level, and a lot of momentum that saw price immediately rally to 188, where it once again ran into some resistance. But if you take a look at the price action at this 188 level, you can see it's very much neutral. Price isn't exactly reversing lower. Yes, it's set to open a little bit lower this morning, but still staying above that 185-ish area. So this for me does indicate a potential breakout is coming sooner rather than later, as price is consolidating before this major resistance level. It also allows for momentum to recover from a heavily overbought condition. It's still quite overbought with the 50-period CCI just below 200, but we could see potential breakout here quite soon for small caps, and that'll be above the 38.2 fib level. After that, we'd have the 200 area, which is the next key level for IWM. And of course, you have the 23.6 fib level, which is a 210 level. So those are the two key areas to the upside that I am looking at. On the weekly time frame, momentum turning positive as well, which is encouraging here for IWM. All right, taking a look here at TLT, which is a Treasury bond ETF. And the first level that I'm looking at is actually this level just below 104. Price is clearly one that found that it acted as support a few weeks ago. Eventually, there was a breakdown, and there's been already a few failed retests of this level here, and even more recently on Thursday. So there's some bearish price action at 104. That being said, price has bounced higher from this 100 major support level, and it hasn't quite revisited that yet. Instead, we are seeing a bit of a short-term bearish trend, price squeezing this 104 level, and we could actually see a breakout here for TLT and a potential move higher back to 108, which is the major weekly resistance area. So if we do get a breakout, that's where my bias is leaning towards, a breakout of 104 and a rally back to 108. And we'll see if price can break above 108, but so far that has held as a very strong area of resistance. Right, taking a look at the US dollar. So the US dollar has come under some significant weakness, especially last week. So overall, a bit of a bearish trend turning a little bit more neutral, major resistance at 105.50. And we did get a strong rally a few weeks ago, but price running into resistance at 104.50. So this means the price has technically posted a new lower low. Since then, a lot of bearish momentum last week, followed by a couple of days retracement higher. Looks like it's lining up for another leg lower here with the major area of support at 101. So that'll be my downside target here for the US dollar. Clearly a bearish bias here and momentum turning negative on the daily time frame. Okay, moving on to gold. We can see that with gold, usually it moves inversely to the US dollar as it's a safe haven. And the risk on sentiment has definitely seen rotation out of gold. There's no doubt about that. But you'd also think that the recent decline in the US dollar should see gold find some support. And you could say it has. I mean, after breaking below 184, which was a minor support level, and after forming a huge triple top at 190, gold has been quite neutral. It's rejected 184 a couple of times. Price is actually struggling to find momentum to move higher, but it is finding some support at 180. So my bias here is neutral, maybe slightly bearish. That being said, a weak US dollar or a declining US dollar is going to give some support for gold, despite this rotation or a slow rotation out of the safe haven into more higher growth or riskier type assets or sectors. If we get a break below 180, the next key level that I'm looking at is all the way here at around, you could say 174 could be a minor level. but also you have 168, which was the previous major swing area. So those would be the two downside targets that I am looking here for gold. But for now, price does remain quite neutral. And taking a look at oil using light crude oil futures, we can see that price has once again been in this area, which I'd like to call, a very neutral area. Very choppy price action, very difficult to dictate where price will head to next. Over the long term, there is definitely some concerns for oil, given the fact that the Chinese data that's coming out isn't quite strong. We see China maybe deteriorating from the economy deteriorating a bit this year, really suffering with this real estate sector, which plays a huge part in its GDP. So that naturally plays a big part in terms of oil demand or lack of oil demand, and that is what has been causing an overall bearish thesis for oil. That being said, oil producing countries are cutting back on supply. So that means that, with less supply, price should get propped up a little bit. And we are seeing that with price staying neutral despite the macro concerns, especially from China. We have resistance at 74, and we could very well see a rally to 74, but still, even today, lack of momentum, very much in, no man's land. Very difficult to dictate where price would head to next. But if you were to trade oil or companies or energy companies that have a high correlation to oil prices, you'd probably want to wait for a rally to 74 before looking for some bearish opportunities, or you'd want to wait for a decline to around the 67, 68 area before looking for some short-term bearish opportunities. No matter which way you do trade them, though, it's going to be short duration trades because of the choppy price action. And you probably want to look at strategies such as credit spreads as opposed to debit spreads, where you're selling options, you're taking advantage of the time decay. That makes it a profitable strategy even in a neutral market condition. Sorry. Okay, moving on here to the sector rotational chart. We have 2 sectors in the improving and leading category and 9 in the lagging and weakening categories. So in the leading categories, discretionary performing very well. Finding some momentum, finding some relative strength after recently rotating from the improving category. So providing some leadership there for the overall, for equities overall. Technology initially was losing out on some momentum, but has since found some relative strength there again, moving to the right-hand side. So again, discretionary and technology providing that very strong leadership that we've seen over the last few weeks for the major indices. Communications, on the other hand, after spending a couple of months in the leading category, we have seen now this rotation into the weakening category, losing out on momentum and relative strength. And when you take a look at the lagging category, we have quite the rest of the sectors really. Financials making a huge comeback, increasing in momentum. Real estate as well was initially making a comeback, but is now losing out on some momentum. There is some negative impact from China regarding their weak real estate sector, but not too much for the US real estate sector. But still, that is going to be weighing on investors' minds, and we are seeing now. Sorry, that's energy, but real estate here moving a bit more to the left, so losing relative strength. So my point still stands. We are still seeing some weakness from real estate compared to a few weeks ago, where we were initially seeing a bigger move to the upside from a momentum perspective. Energy moving a little bit more to the left, losing out on momentum due to the very choppy price action with oil. We have our defensive sectors in healthcare, staples, and utilities all losing out here considerably as investors shift onto a more risk-on sentiment, so are naturally rotating out of defensive sectors into other sectors. And we have seen all 3 of our defensive sectors rotate from the improving category very quickly into the lagging category. Moving on to some subsectors of interest that I have for you today. First up, semiconductors from last week. Semiconductors definitely in the forefront of investors' minds, considering its exposure to AI. And we have major support or major resistance at 160. So that's the key level to the upside that we are looking at. Price has rallied with a lot of momentum, but momentum is declining. price is still managing to move a little bit higher, running into some resistance at around 156. So we could see a short-term pullback, potentially back to 144, where price could find some support. But overall, this is still a very strong sector. It hasn't quite reached 160 yet, so I think after we get a pullback, we could see a bounce higher towards that 160 level. Taking a look at IBB, which is the biotechnology ETF. So this was a bullish idea that we've had for the last couple of weeks, and so far performing quite well. We were looking at this idea when price was at around 127, 128. We saw initially a move higher, followed by a limited pullback towards 128, plenty of intraday support and an intraday bounce, and another leg higher. Price did reach our first take profit zone at 133. However, there is still another take profit zone at 138 that I'm looking at. So, if you did trade this, 133 would have been a good time to take partial profits. But I still have a bullish thesis here on biotech. And price action is still quite bullish despite the bearish day on Friday. But moving on to LIT, which is the lithium and battery technology ETF. So this is a new idea, and this is a bullish trade. However, it's one to more add to the watch list as opposed to being actionable right now. I mean, my overall sentiment for equities is expecting a bit of a pullback before looking at long-term bullish opportunities. And this is a great example of that because we are seeing a big gap down at the open. But overall, price did reach an overbought condition. That means I'm looking for a short-term move lower. And we have the key area of 63, previous areas of resistance, hopefully may turn to support, and that'll give a nice risk-reward bullish opportunity for continuation higher here for LIT. And the next key level that I'm looking at is at 72. So plenty of upside, but a bit of patience is required for this pullback. In my opinion, definitely one to add to the bullish watch list. Moving on to Take Two. So Take Two, another bullish idea that I have for you today. And we can see here that price has gapped up, just a few weeks ago. And since then has been trading a little bit sideways. But the way I'm looking at it is if you take a look at the weekly level, we have the previous area of resistance at around 135. So 133. Price has broken above that, as you can see, and has since pulled back. And that previous area of resistance does seem to be looking like it is acting as support. We are seeing a pickup in momentum and price continuing to move higher. Despite even on Friday, a bearish day for equities overall, prices actually continue to move higher on Friday. So that indicates some very good relative strength against the broader market. And I am looking for continuation high here for Take Two. Potentially, you're looking at the 150s as the next key target, but could even go higher towards the 170 area as well. But this is a nice entry point, in my opinion, after a breakout, a pullback, retest, and bounce. Right, moving on to another idea that I have for you today, and this is American Express. So a bearish idea for today. And what we've seen over the last few days was a very strong rally. Price almost reached an overbought condition, but it is running into resistance at around 177. We are seeing bearish price action at that level. And I still think, this has a potential to be a bit more bullish. I do think there's potentially another leg here, but this is a short-term bearish idea. Again, if you are looking for bearish ideas, I do think it's best to stick to the short term. We've seen price open a little bit lower this morning, and I'll be looking for a fade down towards that 165 level, previous support level, previous resistance level, and it could act as support once again. So very, again, quick out kind of trade over the next few days, but clearly running into some resistance and failing to make a new higher high. Okay, taking a look at Roku, which was a bullish idea from a couple of weeks ago when price was at around a $60 level. I was looking for a breakout, and thankfully we did get a breakout there with price reaching 75, with a lot of momentum, price overbought, running into resistance and a few rejections there. So it has moved a little bit lower. In this case, I'd probably want to take partial profits on the trade, but there is potential for another leg higher. I'm targeting around 79.80. That being said, we could get a pullback down to 67.50 even, which was a previous area of resistance, which could turn to be support here for Roku. But definitely want to take partial profits on and see how the rest of the trade develops. And finally, we have AMT. AMT was a bullish idea from last week. The reason I was looking at this was due to the fact that it was, from 2 weeks ago, actually. But the reason I was looking at this was this double bottom here. And also the 180 level was a pandemic low. So when stocks were selling off across the board in 2020, this is where price declined to. It's chopped off here on this chart. So a very good risk to reward bullish entry point from that level, targeting 210. And so far, this is a trade that's been going quite well. Not that much momentum to speak of, though, on the daily time frame. We are seeing choppy price action, but overall continuing to grind higher day by day. There is some resistance with the 55-day exponential moving average, the blue line. But if we can break above that, that'll be even more encouraging for a revisit back to 212. And with that, that is all I have for you today. Thank you so much for joining me, and I hope you all have a great trading week. I will see you next week for another market outlook. Goodbye, everyone.